Hey guys, welcome back for the June real estate and mortgage interest rate updates. We are here today. It's beautiful outside today.
It is nice outside
Yeah,
today.
just had lunch at Clark's Fork, and all three of us had the teriyaki wrap special, and it was delicious.
I liked it a lot.
Yeah,
I thought the chips were very good too.
I know, that's a surprise. Like the chips were super crunchy, and I was expecting plain chips, but they weren't, so that's good. Anyway, that's not what you're here for. So we're going to go over what took place in June, where our market is at right now, and maybe a prediction of where it might be headed, and then chat about rates as well. I'd also love to just cover, Federal Reserve. There's a lot of, in my opinion, like built up anticipation of the Fed lowering rates. Is that going to affect mortgage rates or not? And so maybe chat about that. So for real estate, the average home price did increase by a little over 1%, 1.7% up to $522,000, which looks good on paper. But if we actually like break that down, an average is the total volume sold divided by the number of units sold, right? So we've seen some pretty good house appreciation over the last, 5, 10, 15 years. And on the flip side of that, we've also seen new pendings and new sales declining. So just looking at the average sale price without looking at the total number of sales looks great. We're all probably pretty happy. But the reality of the market is volume's been pretty steady with prices, but the number of sales we've seen has actually kind of started coming down.
Yeah, it just means that the price of the sale is going up.
Yeah, yep. So, I mean, again, it's nice to look at on paper, but certainly not everything. So we did see new pending sales drop by a little over 1%. We've seen new inventory come onto the market. Month over month, we're up 8%. Year over year, we're up 18%. If you're a buyer, there's more to choose from. If you're a seller, there's more competition. And it's forcing sellers to either have the best conditioned house or a house that's priced under where the competition is.
Yeah, I mean, I think, especially coming out of the markets we've been in where it's been a seller's market, sellers aren't used to having to maybe rethink how the process is going to go, given the fact that the first person that walks in at the open house may not be the person that's making an offer followed by 3 other offers.
Yeah, yeah. So where are we sitting rate-wise currently?
Well, so for the month of June, rates improved somewhere between a quarter and an eighth of a point. These are national averages. We started the month in June at like 6.85%. We ended the month at 6.675%. I would say, listen, again, these are national averages. I think Spokane tends to be about an eighth of a point better in rate than the national average. Plus, these are your conventional loans. Currently today, you're looking at your government loans are currently today probably at 6 1/8 or 6 1/4. So don't always believe that rates you hear about or read about in the paper, those probably aren't even accurate for you. So, it's encouraging to reach out and let's, figure out what your interest rate's going to be.
Yeah, yeah. So while we're on rates, I'd like to ask a question because one of the biggest, I think politically hot button topics right now is the displeasure that people have with the Federal Reserve Chairman and holding rates steady. So hypothetically, if this month or next month, because I think it's projected we're going to get 1 or 2 rate cuts, does it do anything for mortgage rates?
Well, the reality is what the Federal Reserve Bank rate is what banks can borrow money from the Federal Reserve Bank at. And dropping that a quarter point, which is typically what the cut would be, is not going to have a quarter point rate cut on mortgages. Typically, when the Federal Reserve announces these rate cuts, there's an automatic reaction.
Sorry, we just had a brief intermission for the lawn mowing, which apparently takes place on Wednesdays around noon. So if you're here and outside, yeah. So the question was, if the Fed reduces rates, does it do anything for the 30-year mortgage?
No, I don't think it does. I mean, there's no direct correlation between the Federal Reserve overnight bank rate and 30-year mortgage rate. They tend to follow each other in some ways, but there's many times the Federal Reserve has lowered interest rates and mortgage rates have gone up, and just the opposite. They have raised their rate and mortgage rates have gone down. The mortgage rates are much more based on many other things that are going on in the financial markets. Inflation is a huge one, and the Federal Reserve Bank isn't always concerned about inflation. That's only one of their two tenors. Employment is the other.
Yeah. And so if we have pretty decent unemployment rates, inflation at 2.4% or whatever number you look at, it really makes the argument of what's the point of having the Fed reduce rates?
Well, I think it's interesting, and certainly there's a lot of politically going on with the Federal Reserve Chairman. But if you look at the June meeting, and those minutes just came out today, it was a unanimous vote by the 13 voting members not to raise rates.
Yeah, not one person.
Lower
agreed.
rates. Yeah, not one person dissented.
Yeah, yeah. So it's not just the Federal Reserve Chairman; it is literally every board member.
Yeah, and I think it's when I look at things with the Federal Reserve announcement it's kind of like looking at when the Supreme Court makes an announcement. If the Supreme Court has a vote that's 5-4, that means that they're pretty conflicted on what the report should be. If it's a unanimous decision or if it's a 6-1 vote, then that shows that the Supreme Court, that's a pretty clear-cut decision. I think the same thing can be said with the Federal Reserve Bank. If it's a unanimous decision, then that means there was nobody that was looking to cut rates. Now, if it was 1 or 2 dissenting votes, that would show to me that they are seeing where they might want to start cutting rates.
Yeah, yeah. And the last 2 times we've actually had a rate cut, 100 basis point rate cut, we saw rates go up on the mortgage side 100 basis points.
Correct. Yes. So there is no direct correlation between the Federal Reserve rate and mortgage rate. As an example, I remember when the Federal Reserve Bank announced that their interest rates were going to go to 0 during COVID. I got several calls looking for the 0% mortgage rate, and actually mortgage rates at that time were still above 4%.
Yeah. Yeah. So I guess in summary, the overnight rate, which is what banks can borrow money from the Fed at, has almost no correlation to the 30-year mortgage rate, which is tied to the 10-year Treasury note.
Well, they tend to follow each other
There's more of a correlation.
Yeah, for sure.
Yeah. So, for somebody getting into the market or deciding to sell or deciding to buy, I think for a seller, kind of setting expectations for the market, the fact of the matter is from June of 2021 to June of 25, we've seen a 400% increase in the number of listings that have come onto the market. We've seen a 400% increase in the number of homes that went onto the market and didn't sell. And we've seen trending sales like to the downside. So, the expectation of coming into our market is that you got to be the prettiest house and you got to be priced below the competition. And I would say, there's still multiple offer situations out there, but the average days on market is starting to creep up, for the houses that aren't in great condition or overpriced versus comparable properties. So definitely, also since, over the last decade, like housing prices have increased. So if you have to come in a little bit below comparable properties, you're still probably 80% ahead of where you would be at, if it weren't for the last 10 years and doubling real estate.
Well, yeah, without question. Still, if you look at from when we started COVID to where we are today, home prices are up 30%. In a normal market, that'd be somewhere between 15 and 20%. So you did get 10% more appreciation, than you probably would have in a normal market. But if you're trying to get 20% more than you would have got, that house may stay on the market for a while.
Yeah. Over the last, since 2001, June of 2001, we've only seen a 17% increase in the average sale price. So what, 3-4% a year, which is about where real estate should be.
Right.
So, sorry, my microphone started to drop. I was getting tired. So if I guess in summary, all that being said, if you're waiting for the Fed to reduce rates, it is very unlikely that it has a direct correlation on mortgage rates. So if there is a life event or a motivation, I don't know that I would try and time it around that. And then expectation of putting your house on the market, it is a vastly different market than it was in 21, 22. Best condition, best price. That's the winning strategy.
Yeah, absolutely.
Yeah. So where can somebody find you if they are interested in getting a mortgage?
If they want to find us, they can find us at 509-747-1300 or at chimneyrockmortgage.com.
Yep. And we're at SpokaneHomeGuy.com, and that's 509-990-SOLD, because we do for everyone.